Well, inflation in the U.S. slowed to a 6.5% increase in December, according to the latest read on the Consumer Price Index. Now, that marks the sixth straight monthly deceleration since a mid-2022 peak. Well, joining us now is the White House Council of Economic Advisors member, Jared Bernstein. Thank you so much for joining us this morning. So first, I want to get some of your takeaways, because we know that it was really gasoline prices falling that was one of the biggest contributors here.
Yeah, this is something that's been very important to this president. He consistently talks about the importance of breathing room at the pump for American consumers. Now, in December, according to this morning's CPI, gas prices fell 9.4%. That sounds like a year-over-year number. It's actually a monthly number. We know that gas prices peaked out at a bit over $5 a gallon in June of last year. This morning, I think I saw them at $3.27, so $1.75 off the price of a gallon of gas. That is but one factor in the report, though. We saw used cars continue, I think, a 6 or 7 month negative handle on that part of the index. Airfares down. Core goods continue to reflect the improvement in supply chains. That unsnarling has helped put downward pressure on those prices, too. So it's not just gas, but that's, of course, a prominent component.
And obviously other things that hit home for people, we're talking food inflation, that did tick up as well as shelter, some of these stickier parts of the inflation picture. Why do you think we're still not seeing enough of a decline right now?
Well, last month was actually the smallest increase in food prices in almost 2 years. And in fact, if you go through sector by sector within the components, you'll see a pretty consistent deceleration in the price of foods. Now, eggs, by the way, went the other way, up 11% over the month. And that's very much a symptom of the avian flu. Interestingly, chicken came down, eggs went up. We can argue about which came first, but that's a different discussion. So broadly speaking, though, we are definitely seeing some slowing in food as well. Now, it's not nearly the same as gas, where we've seen actual declines in prices. In food, we're talking more about slower inflation. But I think the key point here is if you look at overall inflation, which of course includes food and gas, it ticked down 0.1% in December, and as we've mentioned, has been decelerating in recent months.
And what do you think this does in terms of recession prospects? Obviously, a lot of people wondering what the Fed is going to do with this information, if the Fed is over-tightening. What does this do for the overall economic picture?
Well, look, from the White House, the way we've talked about this ever since the president wrote about it around a year ago in an op-ed is a transition to steady, stable growth. And the data flow that we're seeing is absolutely consistent with that scenario. That is, it is consistent with an economy that's moving to maintain the achievements we've seen thus far, particularly in the job market. You heard the president talk about that a few minutes ago. An unemployment rate that's at a 50-year low, continued strong job growth, high levels of openings and opportunities for workers. We see the strong job market and this decelerating inflation story as very much consistent with maintaining this transition to more steady, stable growth. At least the current data flow, I think, is quite supportive of that trajectory.
And of course, anytime there's good news, you know, everybody wants to take credit for it. How much do you credit to the president's actions versus what we've seen from the Fed versus perhaps just capital markets doing what they do best?
Well, again, it's a good question, because it takes me back to that same piece I was thinking of. So the president sort of outlined a 3-part plan to help maintain the gains we've achieved while putting downward pressure on prices. And those 3 parts were, number one, an independent Federal Reserve. So you're of course right, that's in the mix. Part 2 is doing all we can to help families with the prices that they face in their daily and weekly budget. So of course, his actions on the strategic reserves, releasing oil there, those fingerprints are on the gas results even now. And then, you know, deficit reduction has been, I think, complementary to Fed policy in terms of what we call a negative fiscal impulse. That means helping on the inflationary front. So we've more work to do. We are not out of the woods. 6.5% year over year is still too elevated inflation. But we're going to continue to press because I think the data flow, again, is very consistent with A, that the president's plans are working to maintain the gains we've achieved while putting downward pressure on prices, and B, looking forward, we have plans in place to build on these successes, whether it's the chips, whether it, in other words, standing up domestic semiconductor industry, whether it's standing up domestic clean energy production, or reinvesting in our nation's infrastructure. All of those work this year, 2023, to maintain the gains we've seen while expanding the economy supply side, which helps with medium and longer term inflation.
And of course, with a Republican-controlled House now, how much of a dampener could that be on some of the economic plans that the president has?
Well, the three things I just listed for you, the Inflation Reduction Act with its investments in clean energy, the bipartisan infrastructure law reversing decades of disinvestment in critical public goods, and the Inflation Reduction Act, every one of those is in the books. It's legislated. And let me tell you something about President Biden. I worked for him when he was the vice president, when he was the Sheriff Joe implementer-in-chief of the Recovery Act. Something that people should know about Joe Biden is more than almost any other holder of high office I've ever worked for, he cares a ton about implementation. And he has told his staff from the cabinet on down, 2023 is about efficiently, effectively implementing these programs on behalf of the American people. Now, from my perspective as an economist, they are pro-productivity, they are pro-growth, they are pro-job, they are pro-environment, sustainable environment. And by, as I said a second ago, by investing in the economy supply side, they're helpful on the longer-term inflation story.
Well, I do want to thank you for joining us this morning. White House Council of Economic Advisors member Jared Bernstein, thank you for taking the time this morning.
My pleasure.